Hey, what's going on, Best fam? I'm Stock Market Jay, and I'm here to say today, bringing you some news you can really use. All right, guys. So this is a concept that's widely known about, but I don't believe that everyone has it kind of down packed, right, in terms of how it can be used for your benefit. But overusing the diversification in your portfolio can actually hinder you, right? So there are two ways to diversify. You can diversify by way of in one particular asset, like let's say the stock market. Diversification in your portfolio would look like owning a basket of stocks spread across multiple industries, sectors, and businesses in order to mitigate volatility, mitigate risk, and increase those profits. So the purpose of diversification is to protect you from loss, right? It's to you're not putting your eggs in one basket. You're not saying, hey, this one particular stock is going to be everything I need. I'm going to hinge my whole net worth on it. Or, hey, the automotive industry or cyclicals are going to be the only industry that I'm planning on putting my money in and things like that. And then if cyclicals go down, you don't have anything to fall back on. Diversification is simply protects you from loss, right? It protects you from volatility. It protects you from risk of losing everything by way of putting all you have into one thing, right? Here's the other part of diversification that people don't seem to understand. You have to diversify across different asset classes, right? Whether it's going to be crypto holdings, whether it's equities and stocks, whether it is government securities like bonds, notes, and bills, whether it is actual real estate or whether it's REITs, right? Whether it's ETFs and things of that nature, money market accounts, even just the high yield savings accounts, not just putting all your money in one thing. So, not just should you be diversified in the basket of stocks that you hold, but you should be diversified in your investment in asset vehicles as well, right? And people really get diversification. This is where the pitfalls come in diversification. The purpose of owning in buying individual stocks, the purpose of stock picking is to beat or outpace the markets as a whole. When you own 20 and 30 stocks, you're over diversifying. Okay, one, because 20 or 30 stocks aren't going to outpace the markets as a whole. We can almost automatically assume that to be true. Two, because now you're not properly able to manage your portfolio, or you're not properly able to allocate capital to each stock, right? You have to understand there is power in shares, is what I like to say. The more shares you have, the more money you stand to make in appreciation, the more money you stand to make in compound interest, the more money you stand to make in dividend income. If you're spreading your money around a multitude of stocks, you're taking away your ability to increase your income, because your income, your money, your capital is spread too thin. Now, let's say if you own a basket of, let's say, 10 stocks or 5 to 7 stocks, right? Now you can focus in on those stocks that are going to give you the biggest returns. You can put the majority of your capital in there in order to increase the shares that you have and increase your compounding, increase your capital gains, increase your dividends, right? Your income. And you can diversify over, let's say, it's 7 sectors in the market. Well, it's 11 sectors in the market. I'm sorry. It's 11 sectors in the market. You can literally own one in each sector. That's 11 stocks right there. You can pick which ones that you feel perform the best. Do your research and pick which ones perform the best, and you can own 5 to 7 in those right there, right? Or you can just own. Here's the thing. Let's say the S&P 500, a tech stock. Let's say one of those blue chip stocks. Let's say two dividend stocks, and something in financials or something that is going to be building the future, right? This is where you make the money at, by way of understanding how to play the game and the rules to the game. If you over diversify, you spread yourself too thin. If you don't diversify at all, you stand to lose your entire net worth in the blink of an eye, right? And then if you don't diversify your holdings across different asset classes, well, now you're not spreading your risk around, mitigating that risk, and now you're losing exposure to the other areas of the financial markets that can also build you wealth and compound your gains over time. All right, investing family. Peace.